Novo Nordisk is falling over 17%. And when a company of this size drops that much in a single move, the first reaction is simple. Something must be seriously wrong. But here's the key question. Is this really a demand problem, or is it a guidance and accounting problem? Because those are two very different things. Keycap 1: Why the stock is falling. Let's start with what actually triggered the sell-off. The market reacted to Novo Nordisk's 2026 guidance. For next year, Novo guided for negative sales growth and negative operating profit growth. That headline alone was enough to break the narrative. Investors had priced Novo as a high-growth obesity leader, and suddenly the company itself was telling the market, next year will be a step back. Algorithms sell, funds reduce exposure, momentum flips. That's why the stock didn't fall 5% or 8%, it fell hard. Keycap 2: But here's what most people missed. If you actually look at the current business, the numbers are not weak. Q4 sales beat expectations. Full year 2025 came in within guidance. Obesity and diabetes sales remain extremely strong. And most importantly, the oral version of Wegovy is off to one of the strongest drug launches in the industry. In less than a month, around 170,000 patients showed interest. At a very low introduction price. With no clear signs that it's cannibalizing the injection version. That is not what weakening demand looks like. So now we have a contradiction. Strong current sales. Explosive early demand for a new product. But negative growth guidance. So what's causing that disconnect? Keycap 3: The US healthcare system, the real reason. This is where things get complicated. Novo Nordisk operates inside the US healthcare and insurance system, which is built on government programs, mandatory rebates, insurance reimbursements, and retroactive pricing adjustments. One of the most important programs here is the 340B pricing program. In simple terms, drug companies must sell certain medicines at deep discounts to qualifying hospitals and clinics. And the rules are politically sensitive and legally complex. Because of this uncertainty, Novo had previously set aside large amounts of money to cover potential rebates in the US. Now, Novo expects that $4.2 billion of those provisions may actually be reversed. But, and this is critical, they chose not to include that money in their official 2026 guidance. Why? Because it's tied to regulation, politics, and timing uncertainty. So instead of being optimistic, Novo chose to be extremely conservative. Keycap 4: What happens if you include that money? This is the part almost no one talks about in headlines. Novo itself said that if you include the $4.2 billion, then sales in 2026 would be roughly flat. And operating profit would actually grow by around 11%. Let that sink in. The difference between negative growth collapse and double-digit profit growth is one accounting exclusion. Same products, same demand, same patients, just different treatment of US rebate money. Keycap 5: So what is the market really reacting to? This sell-off is not about Wegovy losing relevance, competition destroying Novo, or demand slowing down. It's about conservative guidance, regulatory uncertainty, and short-term optics. Novo essentially said, we won't count money until it's 100% certain. The market said, fine, then we'll punish the stock now. Keycap 6: Why this matters for what happens next. And this is where things get interesting. If demand continues the way early data suggests, if the oral Wegovy rollout scales, if US pricing uncertainty clears even partially, then the gap between perception and reality starts to close. The stock is falling over 17%, but the analysts don't lower their forecasts by 17%. Not even 10% after the report. That's why I see this as an buying opportunity, because the sales of the pill is so strong.